Welcome to TradeTheNBI.com. This is John's reports for the 30th. Well, the volatility continues to remain high. We had this whole expectation game coming off the NVIDIA earnings. They were a blowout, of course. That wasn't the question, of course. How far can you go before you're paying an extraordinary amount for forward earnings? We've already reached that stage with a lot of different companies. And actually, it's mostly just the top few, and they represent a big portion of where the market is. So if there's big swings there, you're going to have big swings volatility wise. But all we've done really is gone to the algo level here at the 55.59 to the ABM yellow and traded back and forth. And we've been doing that for the better part of a week now. Makes it pretty straightforward. Your bias is a little bit shorter when you're below the ABM yellow. And then support wise from that algo level, particularly if you have magenta in the lead, which is starting to turn around here. Most of this is just a catalyst point waiting for NASDAQ to even out with the S&P as far as its readings. About to see the MBI blue cross above gray. That would be significant strength that would certainly push over the ABM yellow and move you towards the 100% reading. It's pretty clean from that standpoint. This is that gets into the expectations game, and that's all we're really seeing pretty much for the most part right now. You can see far more short activity within the NASDAQ, but you get that same potential turnaround there. So as long as they remain at odds with each other, it's a little bit more difficult as far as a trend, and that's why we see this kind of just sideways blah. It's just a bigger range on the Nasdaq than it is for the S&P, but still between these two algo levels. And again, the 61% right here makes it pretty easy above that. Extra long because it's going to have extra support going through, and it's just going to push through. And you can see almost the same from the MBI blue to gray. So you're getting a little bit more evening of that situation. And again, this is where I think that sometimes it becomes an issue. People have expectations as to where things should trade based on this and that, and I don't think that's an effective approach. The idea is you should come into it just looking at the readings, clean and simple, and there's either a bias or there's a clear direction. And in this particular case, there's a bias to the upside, obviously, in general, from a daily standpoint. But within the intraday, you just have to go with what is. From a treasury standpoint, they're still way outside. They need this rate cut. Without it, they're pretty much so upside down on the trade, and not to mention they're upside down anyway, just because inflation is outstripping where they're at, and that's just a reality of where things are. And as long as the Fed continues to print, well, it's actually the U.S. is causing the print to take place of trillions of extra dollars every few months, inflation is guaranteed. There's just no way around it. Oil continuing to creep back up to the upside here. That's part of the Libya shutdown and that supply reduction that could start to have ripple effect. You get a couple of those with maybe some Russian oil refinery explosions from the war, and oil could get out of control, in which case then inflation is unstoppable. Euro backing off some of its ridiculous move. No surprise there, but once that steel moves back above negative 13, it should be able to retain some of that strength that it's going into, and that's just because most people are unhappy with the dollar, so to speak, and rightfully so. But as long as it's continuing to trade the commodities, it's always going to be needed. And if you're buying oil in that, even natural gas in Europe, you're paying in dollars. So yeah, what are you going to do? And of course, as I've said, that is going to continue to propel gold. And no matter what the traditional play will be, gold has to continue to rise because, again, it's traded in dollars. It's not going to accept any of that inflationary haircut. And so it's going to rise proportional to the devaluation, plain and simple. When we look at Bitcoin, some of these other ones, they're still suffering from some of the supply issues and that, and of course the mining after the halving, it's created a little bit of a complication. So it's been a difficult space at this particular point. And as soon as the market starts to have some hiccups, you may see it begin to take off again. But still fairly weak from those readings. I mean, we had the crossover here at the peak when it moved above its 61%, and that hasn't changed. In fact, you almost could have the MBI white crossover, and that would be another push down in between those previous algo levels from way back. The same situation with ETH, just not going anywhere, which is quite a surprise to some that the beta on those has faded quite dramatically. It's going to happen. There's ebb and flows to all of these things. So from an intraday standpoint, you saw we had the move down. MBI Magenta took over. Once we got above the 50%, I have to find out why that would remain that way from a code standpoint, because this should have flipped to the green from there. Overall, the broader look of it with the positive shakeout. Once that started to fade, though, we ended up with the magenta crossing below. Once it was fully below the 25, you really got that escalation. And then the magenta popped back above, right in the mid-range, around that 50%, and that's the push that's been higher from there. Pretty clean from that standpoint. I think that you're just going to see a lot more of this kind of trade because it really throws the option players into a loop. If you're not fluid with that, it's just going to be problematic. You can hold on to a direction and you're just going to have to face it. But if you're looking at short-term options, they make it very difficult. You can just look at this chart from a week plus standpoint, whether it's calls or puts, you're being thrown around quite a bit. So it's definitely a trader's market at this particular stage, and certainly great opportunities to take advantage of that as we see it. So in post-market, you can see here they're driving it up dramatically. If we scroll back to what happened during the intra part of the day, you can see pretty straightforward. It wasn't a whole lot to do. Once we started early morning, we got to the peak move. We had the MBI white spike, letting you know that you were at the top of it. It was a matter of waiting for the signal trigger. It happened when we broke below there, but you got the clear indication when the MBI white crossed above the MBI red there at that particular point. And then it was just a matter of waiting. And then another spike came right before the collapse portion, and then it just evened out from there. And now we're just pushing right back up to it. So pretty clean from an intraday. Can't complain about that. I think we're going to see a lot more of that going into September, particularly as the political campaigns start to really reinforce and the market decides where they think things are going, because they're not going to bet against themselves just for their own political advantage. They're going to go with where they know they need to put their money based on who's going to win. So follow it that way, but continue to follow readings. Of course, new indicators for September will be coming out, and it should be another exciting month. This was a pretty wild one, and it went quite well. As always, trade well. We'll talk again later. Anything relevant, I'll put on the Skype chat for you.